it's interesting because the fracking gas story happened, I think, right at a point where they were talking about peak oil. And of course, that just changed the total timeline of when they thought peak oil was going to be reached. And we're sort of at a similar point in time now where we think we start talking about peak copper or peak aluminium, a time when we're going to reach our full output for these metals, and then slowly, gradually, these metals will decline and demand will get higher and higher. But human innovation has a funny tendency of always coming up with breakthrough innovations to sort of deliver a sort of miracle story in resupplying the global planet with new resources.
Fracking revolutionized the gas industry and created many a fortune on the stock market in the process, if you owned the right stocks. Well, what if mining is about to undergo a similar technological revolution itself, one that breathes new life into seemingly depleted mines and the depleted share prices of the companies that own them? I'm joined today by the geologist James Cooper, a veteran of the mining exploration industry. James, you claim that technology can drive the value of mining companies, which is obviously wrong, which is why I've invited you on here. Surely it's just the luck of the draw, who strikes gold and who doesn't.
In a big way, yes. But it's not the only factor. So there's a lot of things we can talk about. So yeah, thanks, Nick, for inviting me along. Look forward to chatting.
Well, James, in your new report, you focus on the idea that technological revolution can drive the share prices of a certain subsector of mining companies. But what's your evidence for this? Because it's a pretty big claim.
Okay, so if we look back in the past, and mining has always has seen major innovations. I guess I should say to start with that miners are generally pretty slow to adopt to new technologies, but when they do, you do see these big transformational shifts happen. And there's been a few of those through history. I guess we could go way back in time to Herbert Hoover, so the Sons of Gwalia mine in Western Australia. So Herbert Hoover, people have probably heard the name. He's the former US president. He was the 1930s Depression president. But he was also a gold miner. He was a trained mining engineer and a geologist. And he started his career in the Leonora area in the WA Eastern Goldfields. And he really sort of set off some of these sort of technological changes in this sort of important gold district. So Herbert Hoover, he developed a mine, one of the deepest underground mines even at that point, just using sort of innovative techniques. A lot of the mining was sort of more prospectors, probably not as trained. So Herbert Hoover was well regarded. He was this American mining engineer who sort of stepped into this frontier location and really transformed the ideas of how underground mining and processing would take place. So Sons of Gwalia was a mine that still exists today. It's owned by Genesis now, so it has a really long legacy of innovation. And then I guess in more recent times, in the copper sector, there was this big breakthrough. It's called solvent extraction and electrowinning. So it's a bit of a mouthful, but this just uses it's essentially allowing copper miners to process what we call oxidized ore. So that's just ore that sits close to the surface. So for a long, long time, this ore was essentially waste, because to process copper ore, you need fresh, what we call sulfide ore. So this stuff which was changed or oxidized because of its interaction with rainfall is essentially useless. So you've got millions of tons of this oxidized ore that's just sitting in waste dumps. And it was the mid-1980s when this new technology was developed and introduced. So essentially you had all these operations with millions of tons of oxidized copper ore sitting on their projects, which essentially changed the value of these projects overnight, because this was all that had already been taken out of the ground. It was just a matter of sending it through the processing plants and turning it to cash. So Just a really good example where technology has really sort of changed and shifted mining economics over time. So there's a couple of examples.
Yeah, and did these actually translate to significant share price moves? I mean, it's difficult to go back to the Great Depression, obviously, with Herbert Hoover and his mine shafts, but in the 80s and some of the other examples of things that have happened since, does this translate to gains? Because that's, I think, what the viewers and the readers are really curious about.
Yeah, I think if you look at, say, what the solvent extraction did to, say, copper miners in Chile, this sort of really established some of these what would have been smaller players into some of the biggest copper miners today. So I think that really helped them elevate and grow into, say, Southern Copper or Antofagasta. So these big copper miners which operate in South America. And it's these technologies which enable them to access and process free ore, essentially, really sort of help them give themselves a leg up in the industry. So there's certainly potential, I think, in future to see these sort of triple 10-bagger type gains from technologies. But importantly, you need the projects in the sort of locations that can capitalize on the opportunity that the technology presents. So there is a bit of...
Yeah, so let's turn to those actual technologies next before we get to why it takes a particular type of deposit in order to generate disproportionately large returns. What is changing in the technological world about mining now? What's the current revolution? You know, if it was Herbert Hoover and his mine shafts in the 20s or the 30s, if it was the oxidization, being able to process oxidized copper in the 80s, what is happening today that is going to cause this revaluation of a specific sector of the mining?
Yeah, or it really covers sort of every aspect of the mining industry. So it starts from exploration. You've got new technologies. So something that's called hyperspectral scanning. So I've used these as a geologist. They're essentially a machine. So we drill core, or the drillers drill the core. The geologists log that core, and that's put through. Well, traditionally, we would do that by hand. We would take notes. We would log it on a laptop. But now companies are able to use these machines to simply put the trays through this sort of. It uses hyperspectral analysis. So the different color waves that the minerals display, they're all unique. So this just enables the computer to sort of log the core according to those different wavelengths. So it's instant.
So describe this machine. So you've drilled a core, which is a long cylinder of whatever comes out of the ground, and you used to put it on its side and take a look, and it was the geologist's opinion, and now you're scanning it with a machine.
Exactly. Yeah.
Can you explain to that?
Yeah. So I'll try to just put it into more layman's terms. So the geologist would log the core, and these machines essentially just do this automatically. And the important thing is there's no sort of human bias, and it's very quick. So it saves companies money. Obviously, they don't need as many geologists doing this sort of rudimentary logging core for hours on end. It means you can process drill core extremely quickly and get that data almost instantly. So it really just means when you're drilling big projects, you can have the information to sort of advance that project a lot quicker than if you were sort of relying on geologists, and also a lot cheaper. So that's the exploration.
And it's also standardized, right? So one of the things that I was really interested in is, historically speaking, there's the human error on one side, and I'm assuming geologists have various incentives when they're looking at a drill core. If everyone's using the same standard, the same type of machine, then it means everyone's results are comparable across the industry, right? Whereas previously, different geologists would have had different perceptions.
Absolutely, and there's a lot of human error that goes into it too. And you might have a different geologist stepping in and logging, another geologist goes on break. So you're getting a lot of variability in the logging. So these machines really do standardize. But in terms of changing the way I guess economics is really important too. So it drives certain projects, makes them more profitable. If you don't need as many staff to sort of capture value from it, then it does open up more opportunities for miners to, I guess, generate more cash flow and maybe transition some of these sort of more marginal projects into profitable mines. But that's on the exploration side.
Keep them coming. Keep,
Yeah,
keep them
sure.
coming. There's a whole, you've got a whole list of technological
I
revolutions
do.
happening.
There's a whole bunch, and I think we're really seeing this right now because I guess we have seen a tick up in commodity prices. So this is starting to help push the tech sector, which probably hasn't really shifted into mining much. But I think that's starting to happen now that there is opportunities for tech companies to make money from mining exploration. So another example, the CSIRO is developing what we call neutron technology. So it's very in the lab still. It's being trialled by BHP. And this just gives instant analysis, so geochemical analysis. So rather than drilling the core, sending it off to a lab, and then figuring out the how much gold is in there or how much copper is in there, this machine is giving the geologist instant feedback as they're drilling. So as they're putting that hole in the ground, how much gold is there, how much copper is there, against waiting several weeks or up to several months for that data. So that's really useful. Again, it saves money, and just having that instant feedback is really useful. Then I guess on the mining side, we've got automation, and that's really changing how mining is taking place. So you're able to sort of access much deeper projects, maybe projects that weren't accessible due to safety, due to the geometry of the mine.
I want the dirty details here. Are we talking gases? Are we talking heat? Are we talking the risk of a mine collapse? What's the trade-off between hiring, the local workforce for pennies, and sending this multi-million-dollar automated machine down?
Yeah, that's a good point. I would say gas is certainly an issue. Heat is probably the number one factor. So when you're talking about underground mining, what is the biggest cost? It's refrigeration, so it's cooling. This is one of them. Probably, I was talking to an underground engineer recently. He said he seemed to think that was the biggest cost for underground miners. So if you can reduce your refrigeration, so cooling these, the deeper you go, the hotter these mines get. That's because of radioactive decay. There's uranium in the Earth's crust. So the deeper you go, the hotter it gets. So the more refrigeration, the more expensive it gets. So this is really just opening up another generation of deposits, which instead of sending people down into these hot mine shafts, you can send equipment down into these projects at a much cheaper cost. So again, it plays into the economics. So if you can couple that with higher commodity prices, then all of a sudden you have a really key project which was perhaps marginal in the last sort of commodity cycle, which is now becoming more and more profitable.
Yeah, there's some other considerations as well. Like, it's not just the cooling; the way the mines need to be designed is probably quite different if you need to be able to send a human down there. Tell us about the microbe stuff, because the microbe stuff's really cool.
So on the processing side, so for processing gold, we generally use heap leaching, which uses sulfuric acid. But one of the big innovations in recent times has been using bacteria to do this, separating the ore from the gold. So this is not only cheaper, it's also more environmentally acceptable, because obviously the bacteria is not causing any harm like acids are. That just makes permitting a lot easier. So if you think about all the mines in the US especially, which are facing a lot of permitting issues, a lot of delays, up to decades in some cases in Arizona. If you're able to make these operations more sort of environmentally sound, then this sort of process is help playing into that sort of theme of less destruction from mining activities. So heap leaching using bacteria is another sort of game changer for future mining, I think.
And artificial intelligence is the big one here. It kind of draws all the other ones together as well. So how is AI being used in the mining industry, and how will it be used in the future?
Yeah, well, that's still up to debate. It's I went to a conference in Sydney earlier last year, and it was actually interesting just seeing what kind of innovations were happening in mining. That was probably the most important thing I got out of that conference, and just the changes that have happened over the last couple of years. And artificial intelligence was a really big one. One of the key areas where it is making a difference is in metallurgy. So if listeners aren't aware, this is just processing ore. So metallurgy is the science of separating rock from what you want, the metal. And every deposit is different. So everyone might think, okay, you've got a rock here and a rock there. How hard is it to actually take out the metal? Surely it's not that difficult. But wherever you are, you've got different compositions of minerals, and this just changes the chemistry and how well you can recover the metal from that ore. So recovery is a really key factor in the economics of a mine. And if you can use sort of AI integration, maybe that's sort of utilizing information and pulling all the information from different mines and all the data and then optimizing that into how this project can specifically recover the most metal it possibly can from the ore. I think that has the potential to really improve the economics of certain projects. So AI and metal recovery is going to be really key in future. I think that's one of the things I saw at this conference. And I think there's other ways that AI will also play a role. I think when I talked about the AI, when I talked about the hyperspectral analysis, so these machines that can actually log drill core instead of geologists, I think if you start to put artificial intelligence into these machines as well, then you probably have something like a super geologist being able to log this core. So just finding things that were probably unrecognizable and linking different information together. I think it's going to be a lot of exciting innovations coming into the real world very soon.
They're only exciting to most people to the extent that they allow them to capture some capital gains on the stock market. So let's get a bit closer to that. We're not all geologists. So we've got this confluence of all these different technologies coming together. Take me through how they're actually going to change mining. Are we going to be digging deeper? Are we going to be digging cheaper? Are we going to be digging more efficiently? Is it more ore per ton of rock? What's changed?
Yeah, so all the above. You've got, when we think about how we're going to sort of get the next generation of deposits, we haven't really put, or the mining industry hasn't really put much investment into exploration or new mine development. So the last sort of 10, 15 years since the last boom, we had a crash. It's all been about capital preservation. So the miners have really been adverse to putting money into growth projects. And I think this is sort of going to be the catalyst of why we need to suddenly adopt a lot more technologies to sort of push through how we're going to find this next generation of deposits. These projects that were once marginal, we now have to sort of reevaluate and see how they can actually be transitioned into something that's profitable. Technology will play a role, but of course we also need high commodity prices. And if those two, that confluence of two major drivers come together, I think they will inevitably, because of this lack of investment in new projects, I think this will see that sort of real opportunity for the companies owning these sort of once marginal deposits So this is where the real focus, I think, should be for investors.
Yeah, it works quite well. The idea is that it takes a long time to find a new deposit from scratch, but we've found a whole bunch of deposits that were declared uneconomical over the last few years because prices fell too much. Now they've been sitting there. We know a bit about them. We know where they are. We know who owns them, which is a key part here. But the question is whether they can be made whether they can be made economical. Miners would say have a net present value that's positive. In this brave new world of new mining technology. That's really what we're focusing on. Is it clear what these mines are that stand to benefit and who owns them? Is it quite simple, or is it still unclear in
some ways? It's simple. I mean, you could look at companies that existed during, say, the last mining cycle, which didn't develop their projects. A good example here in Australia is Rex Minerals. So this company holds the Hillside deposit in South Australia. And it was recently taken over by a larger Indonesian company. For a long time, it was a very marginal looking project. It's a company that's sort of sat around for 10, 15 years, really hasn't gone anywhere. It owns the Hillside deposit. I think it grades at about, average grades at about 0.5% copper, which 10 years ago wasn't economic, but today it is. So these types of projects where copper, you have sort of cut-off ranges of around sort of 0.5% for copper, maybe 1 gram per tonne for gold. So you'd be looking for specific ranges, average grades, where these projects are hitting the mark to be profitable. And I would probably be looking at projects that you're right, that you know the company, so have existed for a long time. There's a lot of drilling done at these projects. The resources is really shovel ready, so it's ready to be mined. I think this is sort of an express pathway to get a really cheap stock, maybe a company that's priced similar to an explorer, but a company that could be in production in sort of less than 5 years' time. So I think that's where the opportunity is.
And that's what's really exciting here to me is the deposit is slightly understood. We kind of know a bit about it from the past exploration and drilling before it was abandoned for being uneconomical. So its net present value was zero because it wasn't developed, it wasn't economical. Suddenly it is, which means the leverage, we'd say in financial markets, not using debt, but the gains on offer here are dramatically larger for these types of companies because they're sitting on something that has a value of nothing. And then, because of technology, they're sitting on something that has a positive value. It'd be easy to say, the whole mining sector will benefit equally from this new technology because it's going to be available to everyone. But these companies are leveraged to that technology, which is why I think you're highlighting them and why you call them transformer stocks. So they're not transforming mining with technology. What they're doing is they're transforming. Well, you explain it. The way you explain this transformation idea is very fascinating. Yeah,
that's right. And you can leverage your position into these sort of projects if you focus on what I say, the transformers. So companies that own undeveloped projects, which could become economic. It's really as simple as that. It's no magic formula. But of course, understanding the geology or the engineering is important because not all projects, even with changing technologies and higher commodity prices, will make it over the line to become economic. And I guess another factor to consider, if you can find the better options, then they're sort of more likely to sort of be in the crosshairs of a potential takeover target as well, because you got to think about who are the potential buyers for these projects, who's going to develop them. It's not necessarily the company that holds them right now. It's going to be a company with deep pockets. So BHP, Rio Tinto. We saw that with Filo Mining in Argentina late last year. So a large undeveloped project, which is being developed by a major. So I think this is where another opportunity exists for investors, that sort of takeover potential, but by focusing on large undeveloped projects, because big deposits just sort of improves that economy of scale, even though it might not have the grades. The big miners like to focus on deposits that might have sort of decades or several decades of output to make all that sort of spending, capex spending, worth their while. So,
yeah, I find this sort of ironic because there's these case stories of companies that are sitting on these marginal deposits and marginal mines, waiting for commodity prices to recover until they can sell them again. And now we've got instead technological revolutions possibly making the cost base lower, and the same net effect. Let's move on to a case study of your theory in a company that is based in a terrible place called Noble's Knob. So with a minimal amount of snickering, can you tell us how this company and this mine and this story is sort of a proof of concept of what you've been talking about with transformer stocks?
Yeah, well, similar to the Sons of Gwalia project, I guess. This particular mine was operational, I think, in around the early 1930s. And again, I think it has a potential reserves of about 1 million ounces that the company is looking to what's the word? Mine, extract economically, which wasn't previously economic based on gold prices sort of 10 years ago. But now, of course, we've got gold prices in Aussie dollar terms sitting at record highs, and US dollar terms sitting at record highs. So the economics have vastly improved for a lot of gold projects. And I think the Noble's Knob deposit in the Northern Territory really sort of sets the scene of what's possible for other sort of undeveloped gold projects across Australia. There's a lot in Western Australia, Northern Territory, South Australia. So I think if we see gold prices sort of stay at these elevated levels, I think we'll see more of these sort of marginal or what have been marginal projects for a long, long time start to sort of be developed. And I think the market hasn't really put a lot of interest into sort of these developer or explorer stories. So I think most of that focus has been on the producers. So I think if we see elevated gold prices, we will see capital investment start to flow down the pipeline into the juniors.
That's the weakness here, is that it does require the capital investment up front to get these technologies to work. Was I right to say at the beginning of this video, this is a bit like the fracking revolution for gas? Is that an exaggeration? Is that about right? Is it similar? What's your take on that?
I guess so. It's interesting because the fracking gas story happened, I think, right at a point where they were talking about peak oil. And of course, that just changed the total sort of timeline of when they thought peak oil was going to be reached. And we're sort of at a similar point in time now where we think we start talking about peak copper or peak aluminium, a time when we're going to reach our full output for these metals, and then slowly, gradually, these metals will decline and demand will get higher and higher. But human innovation has a funny tendency of always coming up with breakthrough innovations to sort of deliver a sort of miracle story in resupplying the global planet with new resources. So I think we could see something like that happen again, but the catalyst for that to happen is, of course, higher prices. So just like the fracking oil story, I think oil prices were at elevated prices before that story sort of took place. So I think we'll see the same thing happen in minerals, because ultimately that's what drives innovation is higher prices and then improving the economics. And I think that's sort of a sort of a playbook that's worth following for sure.
Yeah, it's an optimistic one for humanity, let alone, I mean, technology solving a whole nother problem. Thanks very much for joining us, James. Thanks for your time. If there's enough interest in this video, I'll ask you to come back with some analysis on the UK stock markets to see if there's any transformer stocks for our audience to pick up. So to all the viewers and listeners who have enjoyed this, comment, like, share, subscribe, all the rest of it so we can rope James back in. I want to add one last thing from my own perspective here. It's an incredible time for investors who are based outside of Australia to be investing in the Australian stock market, specifically resources stocks especially, but just also generally. That's for a very simple reason. The Australian dollar's crashed. So if commodity cycles begin an up cycle, it's not unreasonable to predict that the Aussie dollar could double against many of the currencies that people watching, which would add a rather large tailwind to the value of your investments over time. So I urge you to consider taking advantage of this opportunity, especially people outside Australia, as well as those inside, of course. And thanks very much for watching.